Arthur Hayes, the co-founder of BitMEX and a well-known voice in the crypto world, recently compared financial markets to dancing. He says that just like a dancer needs to follow the rhythm of music, investors need to follow the rhythm of markets. If you are out of sync, you lose money. And in his view, there is only one rhythm that matters right now: credit creation. Hayes argues that Bitcoin is not just another asset, it is a mirror of fiat money supply. The faster governments print, the faster Bitcoin rises. Since 2009, trillions in new fiat money chased a fixed supply of Bitcoin, making it, in Hayes' words, the best performing fiat asset in human history. Right now, the markets are noisy. Tariffs, wars, and political tension dominate headlines. But Hayes says all of that is just background noise. The only sound that really matters is the kick drum of credit creation. That is the beat to follow. Hayes believes the United States is shifting into a wartime economy, and he does not hold back on his language. He calls it state-controlled economics, even using the word fascist to describe it. Why? Because wars require weapons. Governments guarantee profits for companies producing those weapons, and banks, seeing guaranteed profits, are happy to lend. More bank lending means more credit, and more credit means more money sloshing around the system. This, Hayes says, is how money is created from thin air. People get jobs, companies see higher profits, and on the surface, everyone looks richer. But the downside is obvious. More money chasing the same goods means inflation. Hayes calls this new policy QE for poor people. Unlike traditional quantitative easing, where central banks print money to buy financial assets, this time, the government is directly encouraging banks to finance industries it considers critical. His prime example is MP Materials. The Defense Department guaranteed profits, banks approved a $1 billion loan, and that loan created new money, which spread through the economy. Hayes explains that this is how new fiat is born. But Hayes warns about the side effect. Too much credit creates inflation, so governments prefer to blow bubbles in assets that will not destabilize society. China did it with housing. Hayes believes America will do it with crypto. Crypto allows ordinary people to feel richer without driving up the cost of food or housing. Hayes believes this is exactly what the Trump administration is planning. Retirement funds are now allowed to invest in crypto. There is a push to eliminate capital gains taxes on crypto profits. And stablecoin issuers are buying United States Treasury bills, helping finance the growing government deficit. Hayes points out a key relationship. The higher crypto's total market cap rises, the more stablecoins accumulate, and most of that money goes into US Treasury bills. In his view, this creates a perfect feedback loop. Credit growth pumps crypto. Crypto pumps stablecoin demand. Stablecoins buy government debt, allowing even more credit creation. Hayes is not shy about making bold calls. If this credit-fueled wartime economy continues, he believes Bitcoin could reach $250,000 and Ether could hit $10,000 by the end of the year. And he is not just bullish on Bitcoin. Hayes says institutional investors are warming up to Ethereum. He expects massive gains in DeFi and ERC-20 tokens as Western investors pile in. So his message is basically to ignore the noise, follow the credit, and follow the beat. Whether you agree with Hayes or not, his argument is clear. The credit drumbeat is getting louder. And if history repeats, crypto could be the biggest winner. Do you think he is right?